Welcome once again to Darasa Online. My name is Victor Francis, your accountancy teacher. So far, we are still going on with the revision program. And from the previous lesson, we have received many questions. And of course, we are receiving various comments. Most of them are encouraging us to keep on going with this program. But these comments are also blessing us and are encouraging us to do more better. So, as we promised you, we are going to answer all the questions accordingly. Keep on asking, keep on revising. And today, we are going to have another good lesson on company accounts and basically on debenture redemption. Okay? Well, so our revision, as we say, that is on company accounts and basically was concerning with these 5 key areas. That was the revision coverage. We covered this in the lesson number 1, raising of share capital, accounting entries for issued shares. We covered accounting entries for forfeiture and the reissue of shares. And the last, or the previous lesson, we have covered the redemption of preference shares. And let's now have another lesson today on the redemption of debentures. So far, under this lesson, we are going to have one question, but basically in sinking fund method. So what do we mean by the term debenture redemption? So as we were discussing about redemption of preference shares, we say to redeem is to purchase back. So the same applied to debentures. So debenture redemption, we mean buying back the company's own debentures, which were previously or originally issued as redeemable. So all debentures that were issued as redeemable, when the time arises to purchase them back, so the company will do so because it was previously issued as redeemable. So you may go in commerce content and revise these types of debentures. So far you have covered them. So thus, the redemption of debenture will involve now the discharging of the liability on the account of debentures. So to discharge these liabilities means to pay it back. So, and this can either be done at the expiry of the full period of debenture or sometimes even before that time. So there will be an expiry period of this redeemable debenture. But sometimes the company may buy or purchase back these shares even before that time, when they saw it either sold below the market price in the market, in the stock exchange market. So they may buy it before the expiry period. So with the debenture redemption, we have terms that are used in redemptions. And these terms will depend on how these debentures were issued. So we say that the amount payable or paid on redemption depends on the terms of the issue. When these shares were issued, what was the terms of issue? But again, the conditions of the redemption. So you may issue these shares at par, but basically, in the terms and conditions of redemption, you agree before that, these will be redeemed, maybe at a premium or whatever. So, and also the market price of the debenture at the time of redemption. If you purchase these maybe through open market, if they are available in the stock exchange before the expiry. So you are going to purchase them depending on the market price. So the debenture may be redeemed now based on these terms, either at par, if it is payable based on the nominal value, or at premium if they are payable above the nominal value, or at a discount if they are payable below the nominal value. What are the sources of fund now as we purchase back these debentures? So normally the company may use two main sources, internal source and external sources. But with this debenture redemption, these are the sources. So, and these of course emanates from the two broad categories, internal and external sources. So the necessary fund to finance redemption of debentures may be obtained either through new issue of shares or debentures. You issue new shares or debenture, that is external source, to redeem the debentures, or you use the available fund of the company, that is reserves. Or you may use out of profit, of course, the same as available fund, out of capital, using the capital available without replacement, or out of provision made for redemption. If there is any provision that was made purposely for the redemption, it may be either in form of sinking fund, of course we are going to see it later, or by conversion of debentures into new debentures or shares. So you may even, instead of paying them back, so you may convert these debentures. Instead of being debenture holders, you convert them to be shareholders. So there will be terms of conversions. You may use the insurance policy that the amount that is required to be used to buy back these shares may be either set aside annually and be invested in an insurance policy. And after the expiry period, you'll have sufficient amount from the insurance policy to repay back the debenture, the accumulation of sinking fund. Of course, you set aside a certain amount of money yearly. And when the time arises of paying back this debenture, then you repay or purchase in the open market. So if you find them, they are available normally at below market price in the open market. So you may use also this form of redemption. So these are the sources, but let me highlight a little bit the methods that are used. Of course, the sources and the methods almost looks like similar, but these are the methods. With the methods of redemption, so whosoever wants to redeem debentures may opt or use the following methods. As I said, you may use annual or regular drawing out of profit using internal sources, or annual regular drawings out of capital if you're using your own capital without replacing another capital. You may use either fresh issue of shares or debentures. You may use sinking fund. You may use insurance policy. Or you may use purchase in the open market. Or you may use the conversion of all debentures into new debenture or share. So these are the main methods that you can use in debenture redemptions. But of course, as I said, our today's lesson will be basically concerning with sinking fund method. So other methods, I would like you to advise that you do revision. But if we get more time, so we are going also to discuss about purchased in the open market in the next lessons. But for today, we are going to have a lesson on sinking fund method. So what do we mean by accumulation of sinking fund? As I've said before, with this method or with sinking fund, so this is amount of money set aside, normally set aside from profit. And normally we set this aside for mainly three purposes: either to replace asset, or to redeem debentures, or to repay loan. So you may set aside a certain amount of money on yearly basis, annually. So on the maturity, when the asset, if it is for replacement of asset, when the asset is at scrap value, then you'll have sufficient amount to replace. Or at the expiry period of the debenture, you'll get sufficient amount to redeem the debenture. Just the same as loan. If you take a loan now and you need to repay it maybe in future, so, and if it is payable at lump sum, to get all the money instantly, it may be difficult. So you may create now a sinking fund. You accumulate those money and you invest it in an outside investment, an outside securities. So the profit, the interest together with the amount set aside will be sufficient to repay the loan. So, but basically here we are concerning with the sinking fund that will help us in redeeming the debenture. So let's see now, what do we mean by sinking fund method? So this method involves the investment of cash outside in the outside business. And normally this is for the purpose of making investment of money, which together with the accumulated interest or dividends, so will be sufficient to finance the redemption of the debenture at a specific date, as I said. So you set aside annually a certain amount of money, and of course it will depend on the required amount at the end. So this will be apportioned based on the interest rate. So this amount set aside together with the interest therein will be sufficient to redeem the debenture. So if the debenture will be redeemed at a premium, so that amount will be inclusive with the premium. And if it is at par, of course, it will give sufficient amount depending on the calculations that you are going to do. That's why we use this sinking fund table to determine the amount which should be taken out of the profit and to be invested, because we are going to use this to determine how much we expect to receive at the end. How much we set aside and how much we are going to receive, and if this amount that will be set aside for the particular period and together with the interest therein, so will be sufficient to repay these debenture holders. So this amount together with the interest, as I said, and will be sufficient to redeem the debenture. Okay? So under this method now, the main accounts to be opened are three, and these will include sinking fund account, sinking fund investment account, and debenture redemption account. But you may open more accounts, but these are the basic accounts that you must open. So the question will guide you the necessary accounts that you will be required to open. Now let's see the accounting entries for the debenture redemption and the sinking fund method. Of course, these should be categorized into almost three parts, that at the end of the first year. So at the end of the first year, because we said that we set aside a certain amount of money, and this amount will be invested in an outside securities. So in the first year, because this amount will be set aside at the end of the accounting period, then when the sinking fund is created, we debit profit or loss account and we credit sinking fund account. And then this amount will be invested instantly at the end of the accounting period. And when this sinking fund is invested in the outside securities, so of course we recognize the asset investment, that is sinking fund investment account, and we credit bank. This will be the cash outflow. That will be the entry in the first year because we invest at the end. So we expect not to receive any interest. Why? Because the investment is made at the end. So for the second year and the subsequent years or subsequent periods, then we'll have the same entries, the first two previous, but we'll have more entry for interest because this amount invested in the outside securities after the end of at the end of the second year, they'll have accumulated an interest. So when interest or dividend is received from the investment, of course, this is a cash inflow. We debit bank account and we credit sinking fund account to recognize the revenue. In fact, so as usual, we create again the sinking fund. This will be the same as the first entry. We debit profit or loss account. We credit sinking fund account. So the same applied after creating or after setting aside this amount, we are going to invest just like the second entry. So when the year installment along with the interest, then here will be along with the interest, that the interest we obtained. So if we invest this, the amount set aside together with the interest, so we debit sinking fund investment account to recognize the asset, and we credit cash account to recognize the cash outflow. So this entry will be the same for the subsequent period except for the last year. So the last year will have different entries again. So for the last year, so of course we are going to receive the interest as usual because there will be interest accrued for that particular period. We debit bank account, we credit sinking fund account. But again now, because we are going to wind up, and this is at the end of the accounting period, of course we are going to create as usual the fund. So by debiting profit or loss account and crediting sinking fund account. But mind that, so in the last year, no investment will be made because this is the last year. So we are not going to invest the amount set aside together with the interest obtained. So instead now, in the last year, we realize the asset, we realize the investment. So when the investment is sold or realized, we debit cash. I mean, for realized for cash, so we debit bank account if we have received through bank, and we credit sinking fund investment to close the investment. So it depends now. Have we sold? If we realize the cash, have we sold for profit or for loss? So if it's sold at profit, then we debit sinking fund investment account and we credit sinking fund account. What if it is sold at loss? Then definitely we are going to debit sinking fund account and crediting sinking fund investment account to recognize the loss. What next? We expect that this debenture, after getting the sufficient amount, we are going to redeem them. So when debentures redeemed along with the premium, if we are redeeming at a premium, whatever the case, if we are redeeming at a premium or at a par or at even discount. So what do we do? If it is at a premium, of course, we are going to debit the debenture redemption account, and you are going to debit again debenture on premium on redemption account. The whole amount will be to bank. That will be the amount paid. So it will be the debenture. We are going to close the debenture account, debenture redemption. Again, debit to premium on redemption. The same applied if we pay at par. So far, we are going to debit debenture redemption and the bank account. And if it is at discount, so of course we debit debenture redemption, we credit bank, and of course we are going to credit discount on redemption. So that you may use this in reversing depending on the nature of the redemption. So far, when all these investments are sold and the debentures are redeemed, then of course there will be an amount standing to the credit of sinking fund. So we need now to close this sinking fund, because we were setting aside this amount for the purpose of redeeming, and we have realized our asset, that is investment account. Then this amount that was being set aside to the sinking fund account will be now transferred to general reserve account. And this is the case, only a portion of debenture is redeemed, then an amount equal to the nominal value of the share redeemed has to be transferred to the sinking fund account. From sinking fund account to general reserve account. And in fact, we need to note this again, that in case the debenture redeemed at a premium, of course I have shown you in the accounting entries, then the sinking fund should be created for the total amount required, including the premium. Of course, I said before that using that table, so you are going to enter in the formula to include an amount of premium payable at the end should be inclusive in the amount to be set aside. Otherwise, let us now see a comprehensive illustration that will be covering this part of debenture redemption, specifically using sinking fund method. Let us go for a short break. As we come back, I'm going to read the question and then it will be solved. Okay, welcome back. I'm going to read the question for you. The question reads, Jiweku Company Limited issued 2,006% debentures of TZS 100 each. It was on 1st January 2006. They are redeemable 4 years later at 102. So this is the percentage that will be redeemed at premium. And the company decided to set aside an equal amount through sinking fund, which at the end of the 4th year, or at the end of the 4 years, will provide the cash required on 31st December 2009, and the investment earns interest of 4% per annum. According to the sinking fund table, TZS 0.235490 invested annually will provide TZS 1 in 4 years' time. So the investment were sold on 31st December 2009 at par value, and the debentures redeemed on the same date as planned. So from the given information, prepare A, 6% debenture account, B, sinking fund account, C, sinking fund investment account, and D, debenture redemption account. Okay, so this is the question. And of course, if you go through paraphrasing the question, so this redemption was financed by the sinking fund. So we are going to set aside a sinking fund. How much will it be set aside each year? So we are going to compute the amount repayable first. And of course, we are going to multiply with the given figure. That is TZS is 0.235490. So that is where we are going to get the actual amount to be set aside each year. And of course, we are told that this amount was invested in the outside securities, of course, and after the end of 4 years, then the debenture was redeemed as planned. Let us now see how we can open these accounts. Okay. First of all, let me give you the computations. So we are given the debenture. It was issued. That was the is it 6%? Yes, 6% debentures times TZS 100. So it was TZS 200. That is par value. So what will it be? Amount payable. So we are told that the amount payable, it will be, of course, the 200 TZS will be payable at 1 and 2. So how much will it be? If you multiply here, oh yes, 200,000 times 102 over 100. So we get, yes, 204,000. TZS 204. So this will be the amount payable. So what will be now the amount to be set aside on a yearly basis? Amount to be set, yes, aside. So will it be now? Of course, we are told that it will be TZS 0.2354 yes 90. Now multiply with the amount payable. TZS 204,000. So we get it because this amount will provide a TZS 1 for year 4. So if you multiply, you get the amount that will be supposed to be set aside. Let me compute here. I have 0.23 yes 5490 times 204,000. Yes, we get 48,039.9. Of course, we approximate. So it will be now TZS 48,040. So let us approximate. Okay. Now let us open now our account. So we are told to open a 6% debenture account, and of course let me open it here below. This is debit, this is credit. It is 6% debenture account. Okay, so we are told that in the first year, it was on 1st, yes, it was on 1st January. Year it was 2006. 06. It was purchased by cash. It was bank, 200. The par value. Then at the end, that is 31st December 06. You have balance CD. It will be 200. Okay. Let us now open here the sinking fund. For this will take us more, yes, sinking fund account. Debit. Sinking fund account. Credit. Okay. Basically, with this account, we are going to set aside the amount at the end. Definitely will be on 31st December 2006. So where do we set aside? We debit profit or loss. How much? The amount to be set aside. That is 48. Yes, 040. So this amount is going to be invested on the same date. So we close this account on 31st December 2006. Yes, balance CD. It will be 48 040. So let me open here investment account. Debit. What was it? Yes, sinking fund investment account. So we are going to invest the same. So when we invest, we debit investment account, we credit bank 06 48 040. Okay, we go for the next year. Of course, this again should be balanced at the end. Balance CD will be 48 040. We go for the next year. That will be 2007. We have balance brought down to 100 in the year 2. Then at the end, it was not redeemed. So we have 200. This is year 2. So in the year 2 again, we are going to reinvest, to set aside the same amount. And of course, in the next year, year 2, we are going to receive the interest from the investment, which will now have stayed for an accounting period. So we put here our opening balance will be 4804. Then on 31st December 07, we receive bank interest. So the interest will be 4%. 4% of this amount will be 4804 times 4% for a year. Okay, so it will be 1,921. Okay, 21.6. So we approximate. It will be 1,922. That will be the interest received from that amount invested. Then, of course, we appropriate to profit or loss. We appropriate the same amount. That will be 48,040 again. So how much will it be the balance now in the second year? So the balance in the second year will be 48,040 times 2, then plus 1922. So you are going to get 98,002. So that will be our balance. 98,002 on 31st December 2007. Balance CD. Okay, so on 1st January 2008, our opening balance will be 98,002. So far, in the sinking fund investment account, as we know that these interest obtained in the second year from the investment, together with the amount set aside, we are going to reinvest them. So we reinvest again. So we have also our balance here on 1st January 07. Balance BD will be 48,040. So then at the end of the year, we invest. How much do we invest? We invest the interest received together with the amount set aside. Don't invest the balance. So invest only these two figures. That will be 1922 plus 48,040. Yes, we get 49,962. So if you add up with the opening balance, we get, yes, 98,002. So that will be also the balance scaled down. That will be 98,002. So this will be for the year 2. And that's the 02. Okay. We go for the third year. So far, we have our balance here. It is still there. On January 08, we have our balance. We did. Still have 200. Yes. Okay. At the end, it was not still. It was not redeemed. At the end of year 3, so we still have balance CD 200. Okay, so we receive interest again at the end of this year. Okay, how much are we going to receive in year 3? So we are going to receive interest of 4%. Was it? Yes, 4%. 98,002 times 4% per annum. So how much are you going to receive? Yes, we are going to receive 3,920. Yes, 9,020. That will be bank interest. Then we are going also to set aside to profit or loss the same amount, 48,040. So how much do we receive here again? So add 98,002 plus 3,920 plus 48,040. We get, yes, 149,962. So that will be the balance, 149,962. 149,962. And this will be at the end of the year 08, our balance carried forward. So we bring it down here on 1st January 2009, balance BD 149,962. So this is the balance in the sinking fund. Of course, we are going also to reinvest this. So to our investment, remember to bring the balance here on 1st January 08, balance blow down 98,002. So on 31st December 08, we invest. Bank. How much do we invest? Yes, we invest this amount plus this one. So 3,920 plus 48,040. Okay, this is going to be invested. Yes. We get how much? It is 51,960. So if you add, you get how much? Add with 98,002. Yes, we get 149,962. That will be the balance on 31st December 2008. Then balance CD will be 149,962. Okay. So far we have 149,962. Okay. So that was the balance. Then we'll have opening balance here in 2009. Balance BD 149,962. Okay, so we go for the last year. So we have our opening in the 4th year. Our opening balance here 09. Balance BD 200. Okay. So the question tells us that in the 4th year, this 6% was redeemed. So at the end now of the 4th year, so to redeem, we transfer it to debenture redemption 200. So this account is closed. Then we come, because this is the, yes, the end year. So if it is the end year, as usual, we say that we set aside at the end of 31st December 09, we receive the bank interest Well, how much are you going to receive? 149,962 times 0.04. So how much will be the interest? Of course, will be, yes, 5,998. Otherwise, because this is will be the end, the end of year. And of course, because we are going to set aside again the amount from profit or loss of 48,040. And remember, we were using approximations. So we are going to adjust this to reach, to obtain the sufficient amount that is required. Okay? Let me add up 149,962 plus 5,998 plus 48,040. Yes, exactly. It comes to 0.2. Okay, 240. Okay, this is 240. Okay, so remember, at the end, on 31st December 09, so we need to transfer the amount to general reserve. So far, we are redeeming the nominal value of 200, but together with the 4,000 premium on redemption. So to general reserve, we set aside the amount equal to the nominal value. Then the 4,000 will go for premium on redemption. Then, of course, we open up the redemption account, that is debit, credit. Okay, so we send this to debenture redemption. We open up here, debenture, redemption account. Of course, we transfer this amount here. It was on 31st December 09 from 6% debenture. It was 200. And yet, now, so we need to pay these debenture holders. Of course, as usual, this is the last year. We have the balance. Then, so we are not going, because this is at the end, and we are realizing we are paying the debenture. So this amount is already in cash. This we have received, and this we have set aside from our cash. From P&L. And of course, that means it is available in the cash. So this amount won't be invested here. Instead, at the end of the year, on 31st December, that will be 09. We are going to realize our asset. So we realize our asset. So if we realize our asset, let's assume we realize the same, of which now we may realize loss, but let's assume that we are realizing the same. So when we realize our asset, now we get sufficient amount. This amount plus this. Of course, if you add up, you get amount that you are going to pay these debenture holders on 31st December 2009. 9, you pay them 204,000. Yes. So the difference is now the premium on redemption. Yes, this is premium on redemption. That is 4,000. Okay. So here you have 204,000, 204,000. Okay, so this is the debenture redemption, and we have I have shown you the sinking fund account, and the sinking investment account. At the end, we have realized the cash and the 6% debenture. Of course, if you go back to the question, we are required to open up 6% debentures. It is here, and sinking fund account, it is here. Sinking fund investment account, it is here, and the redemption, this is debenture redemption. So this is how you are supposed to do under this method. So far, this marks the end of this lesson. So we are going to display, of course it is displayed, the question that you are going to solve it as a practical question. Continue solving these questions. They will give you more insight and a good understanding of the topic. Otherwise, keep on asking questions through our email, through the number that is displayed. And we wish all the best as you keep on revising, keep on communicating with us. We are here to help you. Thank you for today. Thank you for listening. Hope to meet you the next lesson, where we are going to do more one method, and that will be purchase in the open market. Thank you.